Hello, my name is Katie St. Norris with St. Norris Wealth Management, and in this video we're going to talk about how to fill out Form 1040 SR if you have Social Security income and a pension income for people who are married filing jointly. Let's get going. First, the easiest way to get the form is to type in 1040 SR into search engine, and it will bring you to the IRS website, and you will have the PDF copy of the form. You can type it in and then print it out, or you can print out the form and fill out by hand. It's your choice. You have other options of obtaining your 1040 SR form. You can go to Taxpayers Assistance Center. Sometimes during the tax filing season, you can get the forms at your local library, post office, or even grocery stores. Also, you can call 1-800-TAX-FORM phone number, and they will mail it to you by mail. Let's get to the form. In our example, as I said earlier, we're going to have a married couple filing jointly. We'll start with the first box up top where it says filing status. We'll mark this box here, married filing jointly. Then you're going to have to fill out your first name, your middle initial, and last name. The same for your spouse, and your Social Security number and your spouse's Social Security number. Next, you're going to have to fill out your home address, number in the street. If you have a PO box, you can put your information here, your city, state, and the zip code. Next item is right here. You'll see age and blindness. It will be a box for you and for your spouse. If you're age 65 and over, you're eligible to use the Form 1040 SR. So it could be you will be born before January 2nd, 1955, and your spouse is younger, then it will affect your amount of standard deduction. I'll do both examples. Let's say just you born before January 2nd, 1955, and your wife is not 65 yet. Let's get with this scenario first. We have two sources of income, your pension and your Social Security benefits. If your pension is an IRA distribution, it will go on line 4A right here. If it's not an IRA account, it will be under line C, pensions and annuities. Let's get to the Form 1099-R. This is what 1099-R form looks like. We're interested in box 1 and box 2A. And as I said earlier, if it's an IRA distribution, you'll have box 7 right here filled if it's an IRA account. In our example, it's not. It's a regular pension. We'll have $20,000 of gross distribution, and the same amount will be taxable. Let's get back to our form, and since it's not an IRA, we go on to pensions and annuities. Taxable amount, we have $20,000. Next is our Social Security benefits. You will have your Social Security statement. You will have one for yourself, one for your wife. You have to combine the amounts for you and your spouse when you put it on your 1040 SR. So we have total amount of $23,000. Say you got $13,000, your wife got $10,000. So our Social Security benefits. we go to line 5A. We put our total for you and your spouse, $23,000. And we have to determine if your Social Security benefits are taxable. For this, let's go to the IRS website and see the requirements. There's a quick formula to find out if your Social Security benefits are taxable. The formula is you have to add half of your Social Security income to all other income, including your tax-exempt interest. Say you have interest from municipal bonds. Then you have to compare this amount with your base amount. For married filing jointly, the base amount is $32,000. So let's get back to our form. Half of $23,000 is $11,500 plus $20,000 of our pension, which is $31,500 is below $32,000. So now we know that our Social Security benefits are not taxable. That is great. Then we have to add the lines in here, $20,000, and we know that our Social Security is not taxable. And on line 7B, we're going to have $20,000. We have no adjustments from Schedule 1. So our adjusted gross income is $20,000. Next, we need to determine our standard deduction right here. For this, you have to go back to the standard deduction chart. We're going to find our filing status right here, married filing jointly. As we talked earlier, we're 65 age-wise and our spouse is younger. So why is it important? If it's just you who is over age 65, then we have only one box checked up top. So our standard deduction is $25,700. If up top, right here, your spouse is also was born before January 2nd, 1955, we have two boxes checked. Then, with two boxes, our standard deduction is $27,000. So it's quite a bit different. And on line 9, as we talked earlier, our standard deduction will be $25,700. It's only you who is over age 65. As I said earlier, if both of you over age 65 and you have two boxes checked, you are entitled to $27,000. So on line 9 right here, you will have $27,000 standard deduction instead of $25,700. So we have to add lines 9 and 10. On line 11, we'll have our amount here, $25,700. And our taxable income, our adjusted gross is 20, our deduction is $25,700, which is over, our taxable income is 0. Now page 2, you have 0 and 12B. You have your total tax on line 16 is 0. Total payments on line 19, 0. And on line 23, amount you owe will be also 0. At the bottom section here, you have to sign. Your spouse have to sign. Date this. Your occupation, you put retired. And under prepare, you can write self-prepared. And you done? These are your 2 pages. You have to print them out and mail them in. I would like to mention that if you're a resident of a state with state income tax return, you also have to do your state income tax return on top of 1040 SR. But if you live in a state with no state income tax, like Washington, Texas, Alaska, or Florida, all you have to do is do the federal form 1040 SR for your income taxes. Thank you for watching. Bye.